Hi, it's good to see you again. Did you get a chance to read the recent article in the New York Times titled Fed Holds Rate Steady, Citing Overseas Threats?
Hi Sarah, nice to hear you again. Yes, I did read the article. It was very interesting for me.
Great. Let's start with some basic questions. What's the Federal Reserve?
The Federal Reserve is a central bank made of a federal agency in Washington, D.C., and 12 regional reserve banks.
That's right. The Federal Reserve is the central banking system of the United States. So now then, what are the basic responsibilities of the Federal Reserve?
From my point of view, the Federal Reserve is supposed to help the economy run smoothly. I know that Federal Reserve doesn't print the money used in the United States. I like a lot of central banks. I think maybe its main role is to act as a lender of last resort to help the United States avoid another Great Depression.
Yes, exactly right. To maintain the stability of the financial system. The Federal Reserve does that by conducting the nation's monetary policy and regulating banking institutions. We covered that last week, right?
Yes, we covered that. That's how I remember the lender of last resort.
Great. So, during its recent meeting, what did the Federal Reserve decide to do?
And during its recent meeting, the Federal Reserve decided not to raise interest rates.
Correct. The Federal Reserve's policy-making arm said that it had decided to keep short-term interest rates near zero for an extended period. Can you explain what a short-term interest rate is?
I think a short term interest rate is such rate that doesn't last long.
Well, technically, it's just the interest rate on a loan, or really any obligation, with a maturity of less than 1 year. A lot of the time, people refer to Treasury bills, the short term debt obligations backed by the United States government, as T bills.
Is it written with a dash?
Yes, that is written with a hyphen. So, what are the factors that led the Federal Reserve to keep the rate unchanged?
The main factor was high unemployment. The current rate is even higher than Russia's.
Yes, you're right. The unemployment rate is comparatively high. Although I'm not sure if it's higher than Russia's rate. Is Russia's unemployment rate currently higher than 9.7%?
Russia's unemployment rate is currently around 7.3, so the rate in United States is higher.
Also, the article mentioned that one of the factors that led them to keep rates unchanged was pressure on consumer spending. Do you know what that means?
No, I know what both of the words mean, but I'm not sure about the meaning of the sentence.
Okay, well, consumer spending is simply the total amount individual people spend on a daily basis, as in all of their combined purchases, which in the United States makes up around 70% of the economy. Spending drops when people, consumers, have concerns about the economy. What do people do when they don't spend money?
Some people can put it under the mattress. I'm kidding. They put it in the bank.
Exactly, they save it. When people save money instead of spending it, consumer spending decreases, which hurts the overall economy. The article mentions that while the US economy remains poor, people generally don't think that there will be a Double dip recession. Can you tell me what that means?
No, I'm not sure. I think it's something wrong for economy.
Great question. So, a dip is simply when something goes down. During a recession, the economy is already in a dip. A double dip recession means that after getting better for a short period of time, the economy starts to do poorly again. So, in general, what do you think about what the Federal Reserve did? If you were chairman of the Federal Reserve, what would you have decided to do?
I know that a lot of people are concerned about the potential for inflation, so they think that Federal Reserve is being too conservative. However, I think it's really important for Federal Reserve to keep stimulating the economy in order to avoid a double dip recession.